Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. Got an absolutely packed program today. So in today's video, I'm going to be looking at the various levels on this chart here to know exactly where we are in the current picture. We'll also be looking at the 60-day cycle and having a look at the micro level analysis, exactly where we may bottom out, or the question is, have we already bottomed out? And finally, I'm going to be having a look at the bigger picture view by looking at the various indicators that should calm everybody down and not get swayed by the emotions that the market is trying to dictate to us. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, we're going to start off on the weekly chart and look at a fresh look at exactly what's been happening on this larger time frame view here. So just to refresh our minds, what we've really done since the November 2021 top over here, we've made a very strong bearish move to the downside here in the bear market. And we were looking at the bottoms of where it was going to be. So we finally got the bottom here at 15,400. And in the process of all that, what we've done is to create an inverse head and shoulders. And that is the left shoulder here, the head here, and the right shoulder on this side. We created this neckline at the 25,200 level. And when we broke out with this very powerful candle above the 25,200 level in March this year, then what we've done is to make a high, a fresh high here at $31,000, and now we've had a throwback all the way back to retest this level here. And what that does is it reconfirms the strength of this level here at this point at 25,200. So it's giving us more and more ammunition that this is providing the strongest support yet. And in classical charting, when you have an inverse head and shoulders like this, and we break the neckline and then we come back and retest it, then that is fuel for the next big move to the upside. So we've got to keep that in mind here. So with the 25,200 level, what this move did here by coming back to it is reconfirm that this level 25.2 is actually a very well-defined support. And it's also the demarcation line saying that above this line, we are in a bullish mood, and below this line, if we do get there, not that I think it's going to do that, the higher probability is that we won't go below this line, but we need to just know that above this line, we are bullish, and below this line, we are bearish. And when we put the weekly simple moving averages on here, the most important being obviously the green line here, the 200 simple moving average on the weekly chart. We broke through here on that candle in March and then come back and again retest that exact moving average here. And we're finding support right on it at around 26,400. And as I mentioned in the last few videos, we can always wick below these averages, but as long as we find support on it, and we don't break through, then we're still good to go to the upside here. And if you notice the yellow line, the 21 simple moving average on this weekly chart, we're just about, in the next week or two, going to cross above the 200 there. So that is a bullish cross, which actually coincides with the end of the 60-day current cycle that we've got. And the final thing to look at here is the 50 simple moving average, which has been coming down all this time, but suddenly now is flattening out and moving back to the upside. So the weekly chart on the simple moving averages is once again looking more to the bullish side and looking forward to making progress to the upside over here. And if we look at the Bollinger Bands on the daily chart, they show us a very clear picture that we are actually currently squeezing together. We're going into a narrow phase here, and whenever we get to a narrow phase, we break out either to the upside or to the downside. So here, when it was coming to a very short neckline, it broke to the downside. When it came to here, in this part, that's when we broke to the upside, and etc. So whenever you see the Bollinger Bands squeezing together, we know that within the next week or 2 weeks or whatever, very short period of time, we're going to have a volatile move either to the upside or downside. So that is the current view that we've got on the Bitcoin chart, on the daily and the weekly chart, so that we know exactly where we are and where the possibilities are going forward. So now if we move on to the 60-day cycle, this will give us further information to give us the narrative of exactly where the price could go. So the current 60-day cycle we're looking at is that we've bottomed out here on day 51, day 70, and day 45 currently. This is our thinking here. But also this could be a possibility as well. So we need to just keep that in mind. But currently, the narrative that I've got is that we bottomed out on day 45 and we made a day 12 high over here. And this has ended up in a failed cycle down here. And that is absolutely fine by us, because neither are we moon boys here at the Wisdom Bites channel, and neither are we permanent bears either. What we do is we navigate ourselves from a position of neutrality, and what we do is to let the price action dictate our thinking. And the current picture in the last few days is that we got this red candle. This was the SEC making the charges against the Binance as well as the Coinbase exchanges. But as you can see, it was followed by a very strong green candle to the upside. And for those who with a keen eye will notice that this green candle is what we call an outside bar candle. And usually an outside bar candle at the bottom of a trend usually spells a very bullish move to the upside. And another name given to it is that it's a bullish engulfing candle. So it's the same thing as an outside bar candle, but it's a bullish engulfing candle because it engulfs the highs and the lows of the previous candle here. So this is giving us a clue that this may well have bottomed out here. And the fact that we've been drawing this green line where we bottomed out at the previous cycle on 51 days here and the other cycle at 70 days, and could this well be that we're confirming this green line as a strong support for the start of the next cycle? Only time will tell, but at the moment, from this point here, we are today currently on day 46. So the bottom so far from this 45-day cycle low, this would be bottoming out on day 43. That would be early in the cycle, but so was this over here. So that's quite a possibility, but we need confirmation of that. And we need to move back above the 28,000, this previous high here at 28,400 to confirm this bottom over here. So we shouldn't jump the gun. We should keep in mind that this could possibly be, with a good degree of probability, a cycle bottom low, and we're going to be moving higher, but we won't really know until it crosses above the 28,400 level here. And this green candle is actually a very good sign that despite the bad news out there about the Binance and the Coinbase, this had a great opportunity to actually go much lower. So this was the excuse it needed to go down to much lower levels, and it didn't take it. Instead, what we got was a bullish engulfing candle. And this is what knocked a lot of people. Having watched a lot of videos over the last few days, I've noticed that quite a lot of people decided to get out here at this point, thinking that it's going to go much lower. And this is exactly what it doesn't do. It really turns around. So what I've noticed is that people have sold here at the 25.3 thousand level, and actually now thinking of coming back up here again. And once again, the market has done its job of shaking people out of the market and then shaking them back in at a higher price. This is what Bitcoin does. And unless we get our head around that, we'll always be shaken out here, buying back here, shaken out here, buying back here, shaking out here. So my current thinking here is that I'm cautiously optimistic that we've bottomed out over here at this candle at 25,300. But I won't know the confirmation until we get above this line here at the 28,400 level. And the reason for that is that if you draw the line from up here all the way down, you can see quite clearly that we are still making the higher highs and the higher lows all the way down here. So we topped out at 31, we came back and tested it here, here, and here. So we've been rejected 4 times at this green line here. And at the bottom end, we found support exactly on this new green line over here. But sooner or later, it's going to break through. And this break here of this green line, this descending green line here, this will be our first trigger and clue that we're going to move to the higher side. However, always remember the horizontal support and resistance points. And this is the point, 28.4. So as soon as we get above the green line, we need to get above this 28.4 to confirm the move back to the new cycle for the next 60 days. What also gives me a cautious optimism over here with these 2 candles, the red one and the following outside bar candle of the green candle here, is that it was actually achieved with quite a lot of volume here. So it wasn't as if it was just a market manipulation going on. What we got was very good volume to the downside and then a very good volume to the upside. So usually you find at the end of the cycles, you do tend to get good volume. If you look over here, we've got good volume at the bottom of this cycle. And if we move to the left here, once again, we got very good volumes coming in at this point with these candles here. Okay, so we're going to have a look at the larger picture view now of exactly where we are, so we keep our emotions right intact and that we know exactly where we are in the last 12-13 years of the cycles playing out on the Bitcoin price chart. And I'm going to look at the hash ribbons, which we haven't had a look at for a while. The last time we had a look at it was when we had this blue buy signal over here, and that once again was one of the confirmations that I used for the bottom of this cycle here. And the reason why these buy signals, these blue dots, are extremely important is that because when you go back to the last 13 years, you can see how important they have been in identifying the bottoms of the cycles here. So you had a blue buy signal here, and this was telling us that the market had bottomed out. And this was another confirmation on this cycle, and this was another further confirmation for the upside. So we got 3 blue dots over here confirming that we'd bottomed out and that we're in this phase of the bull market here. And once again, when we topped out here in November 2013, we had the bear market here, the blue signal here confirmed the end of that bear market. Then we got a further 2 more buy signals to confirm that, and that we're in a new cycle over here. And once again, at the end of the 2017 bull market, we got to the bear market here, we got another buy signal, and that was the confirmation of the end of the bear market, and we were moving back towards the top again. And since then, in this particular cycle, we got 1, 2, 3, 4, and the final 5. We got 5 blue circles here to give us the buy trigger, and that was the signal that we were going to go much higher over here. So this blue buy signal here is really the first sign that we normally got over here, and over here. And then that's going to be followed by these further blue signals going forward. So we're now waiting for the next lot over here. So the overall picture tells us we've bottomed out and we are now at the beginning, very short beginning of the next cycle to the upside. So while the hash ribbons over the larger picture time frame over the last 13 years has never let us down, neither has the Gaussian channel. And that's why it's important to keep in mind the Gaussian channel. Whilst it's never let us down, we can only go by all the data points there so that we can actually come to some sort of a conclusion of what we're doing over here. So in the past, at the end of a bear market, we've gone into this green channel followed by a red channel, but once the price comes out of it, we go into the new cycle. Similarly over here, went down here, got into the red channel, but once we got out of the red channel one more time here, that was the trigger to get back into the new cycle on the upside. And then once more at the end of the 2017 bull market, we went straight into the bear market, got into the red channel, but once we got out of it, that was the signal to go back up. Of course, we had this COVID situation. You have to discount that. And currently, we're following exactly the same as before. We've got to the top of the market here in November 2021, followed by a bear market. We've got into the red zone here, and now we've gone above the red channel over here on the 5-day chart. This is the weekly chart I'm showing you just to give you the overall bigger picture, but the main chart here for the Gaussian channel is the 5-day chart, and on that chart, I'll show you in a few seconds, the price has actually gone above the red channel over here, and we've actually gone into a new green channel just like this one over here, and this one over here. And finally, on the 8 EMA on the monthly chart for this BLX chart here, once again, this is one of the confirmations of exactly where we are on the bigger picture. Once we've bottomed out, we go above the blue line, and that is a signal for us to go to the next cycle here. In November 2013, we topped out here, got above the 8 EMA, and that was the signal to go up here. 2017, same happened here. That was our signal to go back to the top side here. And one more time, we're finding support right on the 8 EMA, having bottomed out here. So everything seems to be falling in place for a new move to the upside here. So we must keep that in mind when we look at the bigger picture and not get sucked into the emotions of the shorter picture time frame. And as I promised just now, I was going to show you the 5-day chart on the Gaussian channel. We found support with that move to the 25,300 right on the green top line here. And as you can see, we moved from the red channel to the green channel over the last few days. So if the historical context is to be believed, we should now, having found support on this, move to the upside here, and that there is much less probability of it falling below this green line here, which is at 25,000. And finally, this is the thing that we've got to keep in mind. This is my narrative, and this is what I'm looking forward to for the next few weeks, possibly a few months, is these peaks over here, that when we had topped out and came back down, these were the two peaks before the red halving line here. Then the next cycle, we got the peaks over here, and then we got the two peaks after that before the halving here. And similarly, we got another peak and possibly another one here before the next halving. So this is what I'm waiting for, that when you look over here, we've got the halving in April 2024, and what we're waiting for is these peaks before the halving. So we may get one, we may get two. And at the moment, the narrative is that we haven't had a peak yet, because what we do is, as I've measured these peaks before, I don't want to keep on spending time doing that, but we came to these peaks over here at the 61.8 and the 78.6. And if we do those measurements with the Fibonacci retracement, we can see quite clearly here that there is only two levels to look forward to. So going forward, we must look at these two levels. So the 61.8 here is quite clearly at this level here, and that is around about the $40,000 mark here. So this is our first target, and the second target is this one here at the 78.6. These are the two levels going forward which are absolutely critical to our narrative that we're going to get at least one peak before the April 2024 halving. So we must draw these two lines over here as our targets for the next few weeks and months here. So as soon as we get to these targets, this is our cue to actually take our long-term positions, whether it's going to be 10%, 20%, 50% or whatever. Everybody knows their own situation financially, and I will be judging that when we get to these levels here, at these 2 points, at around the $50,000 mark and the $40,000 mark here. And you may have noticed that when I've been showing you these charts, that you've got this yellow line that goes to the tops of these prices here. And when we extend that out, this is going to be our critical line, that when we come up to these levels here at the 40,000, so this line here, if we cross the price at this point, this will be about middle of July, then this is our cue that more than likely we're going to be topping out here. However, if the price action goes further and then starts moving up to this line, then we know that 50,000 is going to be the actual top for this peak. So these two peaks may be able to be helped by this yellow line, because as we know, we have been respecting this all along so far. And at this point would be around about the September time. So anywhere between July and September, we should be hitting this yellow line over here as part of our narrative for the first peak before the April 2024 halving. Okay, before I go, on Wednesday for the Bitcoin Miners private club that we have running here at Wisdom Bites, I'm going to be showing you a company which I featured a few weeks back, which seems to have gone completely parabolic in terms of its production of the Bitcoins. And sooner or later, that company is going to be reflecting that production of the Bitcoins in its share price. And we want to really catch it before that happens. And that company in January produced 172 Bitcoins. And in February, it went to 156. March 172, and then we find the bigger increases coming in April at 319, and in last month's Bitcoin production figures it went up to 508. So it seems to be having very strong growth, and the price for this company hasn't been reflected in its share price yet. So we're going to have a quick look at that, and also look at some of the swing trades for the other Bitcoin miners, in particular Cypher and Marathon, as they look as though they're gearing up towards a bigger move to the upside very shortly in the next few weeks. So we'll have a look at the swing trades for that, as well as look at the deep dive into this particular company. And if you still haven't joined the Bitcoin Miners Club for the videos that we do exclusively on the Wednesdays to cover all of the technical analysis as well as the swing trades and everything else regarding Bitcoin miners, all you have to do is go to the button here, the join button below all of my videos, as well as the description box where there's another link over here. And once you click on that button, you will get a little box in the middle over here, and that will allow you to join the Bitcoin miners analysis that we do every Wednesday at around $4.99 a month. Okay, so we leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.